forum where readers, writers, and artists meet to promote a love of reading, writing, literacy, and the arts. I'm Deborah Thomas, your host for the next half hour, and with me today is Anthony Sykes. Anthony has been with us before. He's talked to us about taxes in general, and we know this is a tax season, so we all need to be paying attention to the information that he's going to present to us. And actually what the show is about is literacy and being literate in every realm, and we need to be literate taxpayers. We don't want to give our money away, and the IRS don't want to let us off on the hook. So that's what he's going to talk to us about. Anthony, welcome back to Literary Speak. Educate us about this whole process.
Thank you. Thank you for having me back. What we do, what my company does, Anthony Sykes and Company, we help our clients get the lowest amount of legal tax possible. And in that vein, this is what I'm going to talk about today, first starting with audits. I know that's a bad news item, but the reality of it is audits are up 400%. Wow. IRS has hired over the last 2 years 6,000 people. They're going to hire again under the last Tax Act another 16,000. That's in that provision of the health care bill. Wow. So people need to be prepared for that. We're going to have more audits than they've seen in a very long time. So I'm going to talk about the correspondence audit, the office audit, and the field audit, and how each one affects each group of people. The first audit, the correspondence audit, what that is, if you haven't included an item of income, W-2 or 1099, or even if you've missed something on your return, you will get a letter from IRS. It will itemize what they think you should have on your return, what they find, because they do have a transcript of all your W-2s, all your income, some of your expenses. They will send you a bill with that saying, this is what we think you owe. Now, it may not be, but that's what you have to respond to. You have about 30 days to, then after that, it gets progressively a little worse, but do not fear, because they're not going to come take you away, not on the correspondence audit.
Well, let me segue in here, because to let you know how I met Anthony, because the IRS, they're auditing me, and I was like, why? So I decided to do it myself, because I always tend to do my taxes myself, and it was the language was getting to be that I didn't know what they were talking about, and so I figured I needed an expert, and that's how I met Anthony. And I'm telling you, he's taken a whole bunch of stress off my shoulder. Everything they send me, I'm like, Anthony. Go ahead, Anthony.
Thank you. It takes time to get through these audits. The correspondence audit can be cleared up as short as 30 days. It also can take as long as 9 months. I've had one going on for now. Actually, it's been about a year, and we should be kind of cleaning it up.
My goodness.
The next one is an office audit. This one can involve either an individual like yourself or someone who has a Schedule C business. And what that entails, they receive a letter. The office examiner sends a list of things that they want you to bring in. Now, this is where you really need to be prepared. I advise that you don't go by yourself, but you can. You will need to generally bring all your bank statements, all your savings account and everything, because what they're going to do is first see if you reported all your income. You have to be able to prove, because that's the way the system is set up. If you take the deduction, you must prove that deduction. If you did not include income, you must prove that you do not have to include that. So when you go to IRS, to the office audit, because you're going to them, you go in, you sit down, they'll ask you a series of questions determining whether you can take that deduction or not. And this is where sometimes people run into trouble, because again, IRS's job is to assess tax based upon what they feel it is. Not that it's slighted against you, but again, their job is to assess tax, so take it as that. The last one, the field audit. Now this, you could have a Schedule C business, but usually it's a little bigger. It could be a corporation, a partnership. They go to your place of business. What you want to do is have them go to a neutral site, such as your accountant's office, because if they come to your home, if they come to your office, then they can get an idea of your how affluent your business is doing. Now that may be good or bad. Normally it's not good. So you want them to go to your accountant's office. Also, all the records that you need for that audit is at the accountant's office. So they cannot ask you for something that's not on that list.
Right.
And again, they're going to ask for all the bank statements. They're going to ask for you to show your receivables, your payables, whatever it is that they're looking at. So you need that documentation, the canceled checks, the receipts, all the things that you need to do in order to justify whatever deductions that are there. And this year, they're also looking at payroll. So if you've claimed independent contractors, they're going to ask you questions on whether or not there really are independent contractors or if they should be employees. And there's a series of questions they go through. Now, in particular, California, if you're in the construction business, and I have a number of clients who are in construction, you cannot have a subcontractor in construction unless they're licensed. And if you don't, then they're automatically an employee. Now, under IRS, they don't really care. So Joe's maintenance, he might just be a handyman, and he have a crew of, let's say, 4 or 5 guys with him. So he has his own business, and they're on his payroll. But he does a job for ABC Construction. All of a sudden, Joe's maintenance is an employee of ABC Construction. So there's going to be an issue in there unless they resolve that right away. So that's for people who are in the construction business. In the past, they haven't pursued it as much. Now they are. They're also looking at barber shops and beauty salons and so on. So in all these audits, you do have the right to disagree. You do have the right to appeal if you know it still doesn't get any farther. So it's not as if they're going to come and take you away in the middle of the night.
That's a relief to know.
No, they're not going to do that. It's designed to, however, ensure that it progressively moves. The letters get a little tougher, but they're also moving to close and say, do you agree with this assessment of tax? And that's where they're going. They want to end this case as much as possible, so you need to be aware of that. I've gone over that a little quickly, but that's the good thing on audits. Where I really want to talk about is how you can end up in those. I've got 12, what they call the dirty dozen of red flags that IRS looks for. One of them is an easy one, the failure to report all taxable income. You win the lotto. Now, not the big one, but let's say you win $1,000. In California, that's not taxable. But federal law says all income is taxable unless it specifically says it's not. So you don't get a 1099 from the state of California. You don't report that $1,000. Going back to this correspondence audit, you may receive a letter saying you didn't report $1,000. Or they may call you in and say, let's look at all your income. Let's look and see what have you done. So
wait a minute. So even if it's not taxable, you still have to report it. So let them decide what happens to that $1,000.
Well, in the case